Welcome back to the Financial Forecaster. Today we're going over consumer discretionary that just came out with great earnings. Not the best, but something that is so bullish going into the reopening that I think lots of people are not paying the attention they should be. So we're going over Aritzia today. And if you don't know about Aritzia, you ask any girl you know if they've heard of Aritzia and they will tell you it's one of their favorite clothing stores. Am I a little biased in the area I am? Probably. But you know what? All I see is when I go near FedEx, if I go over any UPS store, it's returns and orders for Aritzia. And guys, their earnings were not great, but indicative of great future growth. So I'm going to go over Aritzia with you guys. Thank you back to the Financial Forecaster. Let's get into this consumer discretionary and why I'm bullish on Aritzia. Let's go. All right, guys, so today we're just going to go over the numbers, bare bones, what we like to see, trend lines, and I'm looking this to here. It's up on your screen. We're going to go over the revenue growth of the past 4 years. So back in 2018, we had revenue of $743 million. It rose every year to March 1st, 2020. Now, we all knew what happened starting March, and since then, year over year, they've dropped about $140 million in revenue. Now, the gross profit also was rising year over year and also took the same hit. Now, I want to be very clear. This was 4 years ago, this was a brick and mortar store. They had online sales, but they weren't accelerated to any extent. Year over year, this company, just in the last year, has exploded online. Seeing revenue or growth just from their online business of over 70% quarter over quarter is fantastic. Now I'm averaging those together. It was a bigger growth during the very beginning of the pandemic, but it's slowed down since then. But you can see that even though they've taken a hit, this is with a lot of their brick and mortar stores actually closed. So they've taken this hit, but they're still growing and they're giving themselves a foothold for the coming future. Now let's jump in to the balance sheet and see the health of this company there. So now taking a look at the the balance sheet, we can see that everything is kind of roses here. We've had 2018, they had total assets of $568 million, and to date they've made that $1.1 billion. Even during the pandemic and everything that's been going on, they've been able to grow their total current assets, their total assets. And you know what? Even though they've had to increase their liabilities over the year, they're still in their asset to liability is completely, for this kind of business, a completely reasonable proposition. There's nothing wrong with it. As I'm seeing right here, they've had to, they haven't diluted shareholders at all over the last year, which is fantastic. They haven't had to. That's a really good sign for a company that is growing, increasing their liabilities, but being able to do so without going into their shares. This is showing that this company is maturing. This company is heading into a cycle where it's not about having to do dilution. They can just grow on the strength of the company without having to take a monster pile of debt. Their online business and their pivot, you watch any of these big financial advisors or these big Bloomberg, CNBC, anybody who's talking about companies to watch out for, you're watching for companies who are taking out exorbitant amounts of debt to grow their business. Aritzia has been able to do that organically. They've found a way to jump into the online space, really capitalize there, and being ready to jump on the trade when people are outside of this pandemic, when people are coming back into the mainstream, when people are going out and enjoying their life. When quality of life starts to go up and people have saved all this money from not going on vacation, people are going to be spending on clothes, people are going to be spending on looking good. They want to feel good, they want to look good. People are going to have money to burn. And Aritzia, guys, again, this is a mostly male-dominated channel. I go through my analytics and it's mostly males watching me. I cannot stress to the men watching as much as I can. Aritzia is a phenomenon. They have great quality clothes, respected brands, storefronts that people love to go into. If you've never seen an Aritzia at a mall, they're beautiful stores. So looking just at their balance sheet, it is fantastic. So after their balance sheet, let's get into their latest earnings. That's where the meat and potatoes. That's where are looking forward, seeing how the company right now, the snapshot of the very last quarter, the most public numbers. Let's see how they're doing. Let's go to that. So here we have it again. We have their earnings report up. Their quarter four e-commerce revenue increased by 81%. That is they've almost doubled their revenue just from online. And in the position we are now, where they have a lot of their storefronts closed, not all of them, they've slowly been reopening them, opening them, closing them, opening, closing them, depending on where they are and what's been going on with that local part of the world. But their quarter four net revenue decreased 2.9%. Now, that sounds bad, but they're a consumer discretionary for clothing. When clothing, a lot of people aren't going outside, a lot of people aren't going to weddings, they're not going to parties. This is a company in clothing that really wants people to look their best, to have these outfits that they want to show off. And when I see that, I know that when reopening happens and when all the stores are opened, that this is a trade that's going to, like, a little piece of nugget on Aritzia. I don't know if anybody knows that Aritzia's never had to close down a store for poor sales. No matter where they've put it, they might have moved locations for strategic reasonings, but they've never had to close a store during poor sales. Once they open a store, it goes bananas. People really like them. Aritzia is a very loved, well-known brand. They've got TNA and they have a lot of other brands underneath them. Looking at I'm just gonna quote right from them. Our financial results for the fourth quarter demonstrated the strength of our multi-channel business and growing affinity for our brand. I completely agree. Our e-commerce channel sustained 80% growth while productivity is open. Yet severely constrained boutiques remained at 80% compared to last year. Despite the government-mandated reclosure of 39% of our 39 of our boutiques, we delivered a net revenue of 267. So they had 39% of their boutiques closed down, yet they only lost 2.3% of revenue this quarter. Once those 39% of stores are back open, we're not only going to see that 2.9% recover, but we're going to see on top of that easily. So that is promising. We look at these numbers, and I'm just sitting here. Nobody knows what's going to happen. The stock market, people are worried. People are looking for growth. People are looking back at bonds again. Like, what's going on with the stock market? You don't play the massive. You got to stay invested. And if you're looking for a good consumer discretionary stock, again, I was piling into Aritzia since a couple months after the pandemic. They were hit. Of course, like everybody else, of course, a clothing store, most of their stores are closed down, but I saw an opportunity. This brand didn't do anything wrong. They weren't losing money because they made any missteps financially or with their brand. They had to close down like everyone else. This is a reopening play, and I think it's a pretty solid one. Aritzia has a great balance sheet, great leadership, and you know what, their quarterly and their forwards, I think they're looking pretty optimistic. So let's go back to the main screen. I think I just went over the numbers with you. They seem solid. They want to go into swimwear. They want to go into lingerie. They want to look more because they're making their puffy jackets. That's their big allure. They're already making those for men. And if they start breaking into men a little bit more as a market, that's a huge untapped market for them. And let's hope they can execute on that. So let's go back to the main screen. Let's go. All right, guys, welcome back. So that's Aritzia. It's hard to go through anything that this isn't an exciting play. It's a consumer discretionary. It's a clothing store at heart. It's an e-commerce clothing store that's putting almost all of their attention into growing their e-commerce business as stores remain closed. When stores start reopening and they're being able to combine the two with this huge growth that's been able to occur in their e-commerce business, that's thrown the brand ahead in at least 4 or 5 years in what they thought they'd be able to do online, they are going to be in a position to dominate moving forward. Their price is about $30 right now a share. Let me just yeah, exactly 30. Look at that. So they're at $30 a share. By the end of the year, easily. My projection is they're going to be at $35 easily, and I've always make a conservative prediction for where I think shares are going to be. I think $35 is completely reasonable, especially with 2 more quarters. Everyone's getting vaccinated. We're almost there. By the time December rolls around and third quarter results are out, man, I think everybody is going to be blown away by how they're putting their online sales and all their boutiques are open. it'll be rosy. So if you believe in Aritzia, leave a comment below. I'm a little subdued today. It's the weekend. I'm taking it easy. No stress here. Financial forecaster, guys. We're talking about Aritzia. They've got a solid balance sheet. They've been able to stay open and strive in this kind of hard economic environment we've been in. They've been able to handle lockdown. They've been able to handle e-commerce. And moving forward, let's hope that they can keep expanding, especially into the States where they've been seeing a good amount of success. So that's Aritzia. Thanks for coming to the Financial Forecaster. Easy video today. If you think Aritzia is a good buy, throw it down below your comment. If you think I'm crazy and they're overvalued, put that down into the comments too. Thanks for joining me today, guys. Financial Forecaster. Have a great week ahead. Bye.